What's going on, guys? Today I'm going to be discussing my top 3 stocks for the month of May. So let's keep in mind, most of these stocks are very high risk stocks. Throughout my investing career, I've pretty much been investing into high risk, high reward stocks. Also, let's keep in mind that 2019 has been a very hot year for the market. These are times when I would more likely be collecting profits versus buying stocks. When you look at companies nowadays, for example, Apple, Netflix, Microsoft, all these companies are near all-time highs. So I probably won't be investing into companies that are near their 52-week highs. I'll be most likely searching for the companies that have been beat up and that I think have potential to make nice runs. So all these companies I'm about to bring up right now are going to be companies that have recently had nice corrections and that I think have potential to win. So let's get started with my top 3 stocks. We're going to do some technical analysis. We're going to look at the companies. Some earnings are coming up for some of these companies. I'm just going to give you as much info in as little time as possible. But before we get this video started, don't forget to give me a thumbs up, hit that notification bell if you're new to this channel, and smash that subscribe button. So the first company I'm going to talk about is Tesla. So Tesla year to date has gone down 14.9%. From Tesla's high of $347.31, Tesla has already dropped 24.2%. Now, taking a look at these Tesla charts right here, we see a resistance line at about $380. We also see a support line at about $260. We've seen Tesla go as low as $250, and that was in the past year, a little bit more than a year. Right now, Tesla's currently sitting at $258.40, down 0.12% in the pre-market, pretty much sitting right at this support line right here, which makes Tesla an attractive investment for me. I currently have a buy order at $255, which would be a small position that I would start with, and if Tesla continued to decline, I would increase my position. So now there's a lot of pros and cons with Tesla. If you guys want to know more about Tesla, I have a couple videos with Tesla, one of them being Tesla's robo-taxi in year 2020. You guys could check out that video.
So buying a Model 3 is a good deal.
And I also have another video titled, Is Tesla Stock a Buy? There's some bad news with Tesla right here. My guess is that this is a couple short sellers taking a jab at Tesla. This one being Tesla should be valued at less than $100 a share. So Tesla's earning reports are today, Wednesday, trading at its lowest level in 6 months. One strategist said, should it get even worse for the electric car maker? This is a company that has a cult following, people that believe that Elon Musk is changing the world, and that's the only reason this stock is trading at $260. There is no company that's better at overpromising and under-delivering than Tesla, said Mark Tepper, founder and president of Strategic Wealth Partners on CNBC's Trading Nation on Tuesday. Tepper said valuation should be even lower. If I were to believe Tesla stories with a 35% projected earnings growth rate, even at a PEG, which is a price to earnings to growth ratio that's at a premium to the market, you still can't value that stock at over $100 a share, and $100 is on the very high end, he said. Tesla has not traded below $100 since mid-2013. It would be a drop of 62% to reach that level. So do I believe Tesla can go lower than what it is now? It absolutely can. But the thing is, I believe that this company in the long run can continue to make a run. This is potentially a good company for a swing trade, a good long-term investment. This is my opinion, because I do believe Tesla could continue to drop. But if it does drop, I could see it going as low as 180. This red line right here, I think is anything close to this red line, I would consider a strong buy. If Tesla dramatically drops because of bad earnings, I would consider starting a position with Tesla. This is a company that I currently don't own. And like I said, if you guys want more information on Tesla, you guys should check out my Tesla videos. For now, we're going to look at Tesla. Price to revenue 2.1, price to sales 2.1, total assets 29 billion, market cap 45 billion. So on paper, Tesla doesn't look very bad. The only thing that's concerning with me when it comes to Tesla is the total debt at 11.97 billion. So Tesla earnings just came out and they were disappointing to say the least. Tesla lost $700 million in the first quarter, but predicts it will return to profit in the third quarter as it cuts costs and improves delivery after facing issues ramping up shipments outside of the United States. Also, revenue of $4.54 billion, which is up 33.1% year over year, misses by $640 million. Earnings were very disappointing. Elon Musk did seem to make a lot of promises. He promised that Tesla will be profitable by the third quarter. He also started talking about how Tesla will launch an insurance product in about a month. The thing is, with Tesla, there's a lot of questionable things going on, a lot of promises being made, some of them being delivered, some of them are not, which is why I consider Tesla to be a very high risk stock with potentially high reward. Well, that's enough about Tesla. If you guys want to learn more about Tesla, check out the link in the description or click the link above right here, and you guys could check out more videos on Tesla where I give a lot more information on it. But my second company I want to talk about is IQEE. So this company has been on fire in 2019. Now, I said that I'm going to be talking about companies that have been beat up this year, but I'm going to let you guys know why I like IQE. So in 2019, IQE is up 56.37%. But if you look at their 1 year charts, back in 2018, exactly June 2018, IQE went as high as $44, and since then IQE has dropped over 46.2%. Also, if you look at the high point of this year when IQE went up to $27.70, IQE has dropped 14% since then. I also want to do a chart analysis on IQE, and right here is what seems to be a triangle pattern. Now, usually what happens when you see a triangle pattern is as we start to squeeze tighter into this triangle, usually what happens is we see a breakthrough. So with IQE, we might see a breakthrough in the downward or the upward direction. The thing is, we don't know which way the breakthrough is going to happen, but usually this is exactly what happens, is a huge breakthrough, which is perfect for swing traders, because if you do pick up IQE, let's say I were to start a position at $22.82, I would probably set a stop loss at $22 or $21.80, somewhere around there. And if it had a breakthrough in the upward direction, I would collect my profits. If it had a breakthrough in the downward direction, I would minimize my losses by having a stop loss, which is a perfect scenario when it comes to this pattern right here. Also, looking at IQE's number, their price to revenue ratio is 5.3, price to book is 7.3, price to sales is 5.3, which isn't bad. Also, they have total assets of 6.6 billion, market cap of 19.8 billion, and total of 5 billion shares outstanding. The thing I do like about IQE is they are considered to be the Netflix of China. And we've all seen how Netflix has done here, and now we even have IQE being compared to a company like Walt Disney. IQE currently has more than 87 million paying subscribers. So I feel like they're slowly catching up to Netflix, and I believe that IQE has a lot of potential to continue growing, because if you look at the population of China, it's over 1 billion. Sales for the period have climbed over 51% year over year to reach roughly 932.5 million, with the company's premium member roles hitting 67.1 million, up roughly 61 million at the end of the previous quarter. IQE also issued guidance for sales to grow between 43 to 49% year over year in the current quarter. IQE's revenue from advertising is currently its biggest source of sales, 42% in the most recent quarter compared to 40% for membership services. But paid subscribers growth is the metric investors are most focused on. Results have been encouraging on that front, with nearly 6 million subscribers added in the quarter and more than 60 million subscribers added since May 2015. So IQE also introduced a feature last quarter that allows users to watch 6 episodes of a given drama per week on the free ad-supported model, while offering users on the premium service unlimited access. Management indicates that this played a significant role in subscriber addition. So on the flip side to the big sales and gains in the quarter was the heavy spending on the content. Advertising and branding pushed the company's operating loss to roughly 200.7 million from 149.7 million in the prior year. IQE isn't taking its foot off the gas when it comes to content acquisition and production, and this means operating costs will continue to climb. Another thing IQE has to offer is not only is this a company that's in the digital market, they're also getting into the brick and mortar, where Uke platform consists of several small mini theaters with as few as 2 seats. Moviegoers reserve the posh mini theaters by the hour, requesting content from IQE's growing digital catalog. IQE wants its theaters to be an intimate experience for dates, families, and groups of no more than 10 in China's expanding middle class to enjoy a home theater experience that they probably can't enjoy at home. Netflix is also copying this idea, but they want you to see the trending movies and shows that everyone's watching on their own in large crowds. This also seems like a very good idea. So imagine being able to go to a movie theater to watch Netflix. IQE is already offering something similar to this, and so far it's been somewhat of a success. On top of that, IQE was also named the world's fastest growing brand and fastest growing Chinese brand of 2019 by Brand Finance. Also, another thing that we have to watch is IQE to report first quarter 2019 on May 16th. So I'm not saying to jump on this IQE bandwagon because there is definitely risk involved. This could swing either way, but that's enough about IQE. Let's move on to my third and final company, which is Alkaline Water, ticker symbol WTER. So if we look at Alkaline Water in the past year, Alkaline Water has actually gone up over 212%. But if you look at them recently, when they reached their high point of $6.92, this stock has gone beat up by 54%. Year to date, Alkaline Water is also down 18.8%. So this stock has seen some highs of $7.33 and currently sitting at $3.08. The reason why I like Alkaline Water is mostly because on October 17, 2019, Canada will officially legalize edibles, CBD drinks, possibly might see some alcoholic beverages. So let's learn a little bit about alkaline water. The CBD market is forecasted to be worth a potential $22 billion by year 2022, according to the Brightfield Group. Although much of this market's growth is expected to come from the United States, a country in which marijuana is still federally illegal, but luckily for us here in Canada, CBD will officially be legal. Edibles, CBD drinks, hemp products will officially be legal on October 17, 2019, which brings me to this company, Alkaline Water. So, Alkaline Water is a leading producer of premium bottled alkaline drinking water sold under the brand name Alkaline. So, not only did the company expand its distribution into 30 more Whole Foods stores, resulting in a total of 107 across the United States, but it formed an agreement with Jetro Cash and Carry, one of the United States' leading wholesale food and beverage suppliers. The agreement will provide over 5,000 independent retailers, for example, restaurants, nonprofit organizations in South California, with access to the company's alkaline 1 liter, 700 milliliter, and 500 milliliter products. The Alkaline Water Company's goal seems to be clear: be available in as many locations as possible, whether it's a potential customer favorite diner or their local supermarket. It's a strategy that could prove invaluable in the launch of company's forthcoming hemp-infused alkaline product line, especially considering the importance of brand awareness in the cannabis industry. With distribution into tens of thousands of retail locations across the United States already, including Walmart and Kroger's, the Alkaline Water Company could become one of the first companies in the world to bring naturally flavored hemp infused alkaline water to the US market. So, looking at alkaline water right now, obviously the stock has been beat up lately, which makes it more attractive to me because I feel like this company has a lot of potential to grow, especially when CBD becomes legal in Canada on October 17th. And also, it is a big if, but that is if weed officially becomes legal federally in the United States. I could see this company blowing up, which makes this company very risky because there's a lot of if ands or buts in this company, but that is the risk that you have to pay with companies like this. Right now, this company is trading below this support line, this previous support line right here at $3.30. I'm personally waiting to see how much closer it's going to get to this red line that I've drawn right here. The closer it gets, the more tempted I will be to start a position in this company. We're going to take a look at their numbers. This company has a market cap of 120 million, 34 million shares outstanding. I do like their price to revenue and their price to sales. Price to revenue of 3.0, price to sales of 4.5. The only thing I don't like is their price to book is a little high at 132. Technical analysis for this company is a buy, sell, and a strong sell. 1 minute is a sell, sell, strong sell. So technical analysis isn't looking good, but you can never bet your money on technical analysis. If I'm buying this company, I am betting that it's going to be reaching all-time highs again, thinking and expecting it to go above $7 one day in the future, especially once hemp and CBD drinks become legal in Canada. And the big if is if marijuana officially becomes legal federally in the United States, which makes this company a very high risk company. Just remember that this video is strictly for educational and entertainment purposes. Always make sure to do your due diligence before investing in a company. Anyways, that's it for my top 3 stocks. Let me know what you guys think about these companies, whether you guys plan on purchasing any of them, whether you already own these companies. Just give me your opinion. If you enjoyed this video, don't forget, give me a thumbs up, hit that notification bell, smash that subscribe button. I'll see you guys on my next video. Bye-bye.